Hey everybody, Dow Jones Dave here, and this is my first Dow Jones Dave High Flyers report. I'm going to start doing this randomly for high-flying stocks, the market darlings. I know a lot of people are interested in it, and probably very few people actually know what's happening with it. So this is to be educational and informative. I'm also going to give my opinion, and my opinion is just that. You can lose all or some of your money playing the stock market and buying any stock. And I'm just going to give you what I think. And I won't be trading it because I don't trade Nvidia or any of these high flyers. I'm an option trader, and the premiums are ridiculous. It's hard to make money on them because the premiums are so expensive. Implied volatility is really high. So I generally will play other stocks generally under $100. But I'm here to give you my opinion on Nvidia. First of all, I'm a numbers guy. I mean, I'm sure you're looking at all these charts up here, and I think that what's down here is a lot more important if you're a long-term investor. So one thing I do want to say is that Nvidia and all other semiconductor companies are commodity-like companies. Semiconductors are commodity-like. There's always like shortages and then a glut. So I imagine there's a lot of investment going into chip manufacturing right now, competition, etc., etc. So you have to keep that in mind when you're looking at Nvidia, especially when you're looking at estimates, earnings estimates. So all earnings estimates for semiconductors have that caveat that oversupply could come online, and then those estimates are going to be taken down a lot. Just be aware of that. So I think there's opportunity here, but not at the moment. First of all, let's look at the numbers, and then we'll go to the technicals. We see the price. Everybody knows the price. However, the operating PE, 106.51, sounds awful, really high, 106. But the estimated growth rate is 139%. So we look at growth divided by PE to see how much value you're getting for each dollar you put into the stock, and that would be $1.31 at this point. This is giving fair value equals PE equals growth. So if the PE is the same as the growth, you're at fair value. Now, I know Nvidia is a blue chip stock, supposedly currently, but it's a semiconductor stock. And a blue chip stock will typically be able to command 2 times its growth rate as a stock price. So your PE would be 2 times the growth rate for fair value on a blue chip stock, but not all blue chip stocks. Most of the Dow companies that will apply to, but there's a few notorious exceptions like Dow Chemical never gets to 2 times its PE, and if it does, it's overvalued. So you have to know that there are exceptions to that rule first. And I do not give Nvidia 2 times PE for fair value because it's a semiconductor stock. Semiconductor stocks are subject to commodity-like supply excesses and shortages. And so 1 times PE for a growth rate is fair value, and that would put Nvidia undervalued, but not excessively so, and not so much that I would say you could buy it as a long-term buy, because you can get it for less. I'll guarantee you a pair of dirty fucking socks. Sorry, my language. This channel is for adults, although, so, I doubt if any kids that have never heard that word are going to be watching. All right, dividend yield is so-so. The 52-week net EPS, the current, is 414. Current operating EPS, and this is after the latest report, by the way, is 432. So they did take a slight charge, not really material, but But it's good to know, that the actual PE, on a stock quote, if you just go somewhere and get up a stock quote, you're going to get a stock quote on the net EPS. And if you compare that to the growth rates are an operating EPS, so that's apples and oranges. In this case, it probably doesn't make much of a difference, but in some cases, it can make a huge difference. Company takes a big, huge charge or logs a huge gain, non-recurring, extraordinary, and you'll be doing a PE growth rate off that, and then all of a sudden, you're wrong. Not because you're wrong, but because the number was wrong. So if you compare PE to estimates, you definitely want to use operating earnings, because consensus estimates are in operating earnings. So you want to be comparing apples and apples. So let's take a look at the latest quarter. 1,262% growth in operating earnings on 108% growth on sales revenue. That's pretty buff. I got to admit, that's impressive. And it is in line with the growth rate for this year, by the way, which is only 6 months between this number and that number. And then the growth rate's going to slow to about 50%. So you've got a window here to get this growth. But this price is too high. Technically, we'll get to that. I think so basically you want to catch this growth, but it's already pretty much priced in, I think. Because once this period clears, the multiple year growth rate's going to slow quite a bit. So add to that the variable nature of commodity supply, of semiconductor supply, and you can see that basically you need to get a lower price on this, because this includes this growth rate. So this is going to be more like 50%. And now you got 106 actually you'd have a 50% PE off of, you see what I mean? It doubles, and the growth rate halves for the next years, but the PE's also halved because the earnings doubled. So basically, it's only fair value if you look at the future. This 31% premium on value, 131, is going to disappear next year unless the stock price comes down. Now we get to the technicals. So what do we have here? We have a trend. It broke. This is the closing chart. Drop below the 50-day moving average. Look below and above, and then test. Succeeds. But the problem is this trend line here. It retested, and I'll tell you, this is the real deal here. See this trend line? It broke, retested. Now it's going to tank. You can also see the 1 day MACD starting to roll over, and it's already moving down on the oscillator. So, and you got a big gap here, big huge gap here, and another final gap down here. I can see at least this gap closing. I don't see how it's not going to, given the technical position and the huge failure on the retest. The thing is, that failure happened right where it was supposed to technically. That means this is not good for Nvidia shareholders. And you may be able to go up a day or two, but this is going to come down and at least close this gap. And I would say attempt to close this one. At some point, you're going to be able to get Nvidia for $320. Maybe not this week, next week, maybe not a month, but you're going to be able to get this stock for $320. That's my feeling, and the technicals support it. You may be able to get Nvidia for $320 relatively soon. Don't know that. There are forces on the market right now that don't really have much to do with any individual stock or earnings, or it's about interest rates. Because believe me, Nvidia, these numbers like this right now across the broad market are like practically non-existent. The rest of the market does not look good. Earnings are estimated to decline in the next 6 months for 25 of the 30 Dow stocks. I keep track of all 30 of those, so I got a good finger on the pulse of what's going on with estimates and earnings. And earnings are spotty too. I do a composite report, by the way, and you can come and watch that if you sub up. It's stacks of numbers like you see on the bottom here, and I know most people don't like numbers, but you really should have the numbers if you're going to be investing in stocks. You should know what you're investing in, at least to the extent that it's possible to know. And I consider technicals probably more realistic in that you never know if any of this stuff down here is true. They could be cooking the books. You don't know. Nobody knows, So these numbers here are always in doubt, except for the actual, well, even the actual EPS, who knows? They could have used accounting tricks. I'm not saying they did, but the possibility is always there. So you never know 100% if these numbers are good. You always know these numbers are good. Price action. This is the real, undoubtable truth about what these stocks have done, which is why I think technical analysis is actually more important than the fundamentals. However, to get the extent of your moves, sometimes fundamentals can help you a lot. Like if you got a junky company that's at all-time high and is losing money, is cutting its dividend and stuff like that, that's pretty much a no-brainer that if the market goes south, then that's going to go south or further south. So anyway, this is my Nvidia report and general discussion on the condition of the market, and a perfect technical retest and total failure. Massive, huge gaps. Pretty big. I mean, what's that? I don't know, 445 to, I don't know, maybe a 10-point gap. This one's monstrous. I don't know how, 320 to 35-point gap, 45-point gap. Combined with this failure on a trend retest is just, I don't like it. And that's just my opinion. I'm not going to trade it because the options are too expensive. And it would have to, they're just way too expensive. So, this is Dow Jones Dave, and for my first High Flyers report, checking out.